Brian, great to have you with us.
Great to be here.
Is it?
Kind of.
Yes. Talk me through what we're seeing.
When will this winter end, by the way?
You don't look like it's winter, though, in your world.
I was on holiday last week.
Go on.
Then I had to come back to this. I think people are losing some perspective here. We've had 3 distinctly different months so far this year, if you really think about it, right? Because January, momentum, go, go, go. I'm missing the market after a 21% move in the S&P last year, I'm sorry. January comes, we got to buy stocks. February comes, the exact opposite happens, momentum selling. And then March, you had a combination of not only people worried about higher interest rates, but then later in March, you started talking about recessions and inverted yield curves and things like that. Today's first day of the second quarter. What does this mean? I mean, on a near-term basis, people are taking profits. On today's, what we're seeing in terms of volume, it's not great. So we're not necessarily seeing a bunch of selling, although what's really telling on a very near-term basis, if you watch the market the last couple hours of the day, that's when it really starts to get worse.
Yes.
And so, again, people have been on vacation. It's Passover. I mean, there's a lot of things going on. So the true test of the market, we believe, from a fundamental perspective, will really be seen and said when we start to see first quarter earnings.
What do you make, Julia brought it up, of the fact that we're not seeing much of a flight to the traditional safeties? 10-year yields down modestly, but barely, kind of reminiscent of what we saw in early February, where that wasn't working at all as a balance.
It's a really important point to talk to your viewers, because that means you're not seeing wholehearted selling and moving into the defensive areas. Now, remember, in March, we saw the defensive, the true yield areas like utilities, telecom, and REITs outperform, but that's not the true trend. I mean, you think about it, those areas have dramatically outperformed for several years, where the next true fundamental trend in our markets are that we're going to see higher interest rates. Those yield proxies can't possibly outperform. So that's clearly more of a near-term trading kind of momentum play.